is a deluge of corporate news due in the week ahead, so we'll skip the macroeconomics this time around and dive straight into the companies. First quarter earnings season will be in full swing in the USA, and on this side of the Atlantic, a quarter of the FTSE 100 is due to publish results or release a trading update, and a good spread of mid and small caps are due to do the same. Names which may be worthy of further research include the following, although some of these dates could yet, of course, be subject to change. Keystone Law on Monday the 24th of April, Whitbread, Associated British Foods, Anglo-American, Beazley, Travis Perkins, Petrofac and IWG on the 25th, GSK, Glencore, Bunzl, Standard Chartered, Smith & Nephew, CRH, Persimmon, Elementis and Nichols on the 26th, BP, AstraZeneca, Barclays, Flutter, Sainsbury, WPP, Taylor Wimpey, Weir, Howden Joinery, Spectris, Currys and Lancashire on the 27th, and, deep breath, NatWest, Pearson, Smurfit Kappa, Hikma, Rotork and Renishaw will round off a very busy week on Friday the 28th of April. But even allowing for that long list, the company which might just cause the biggest fuss in the week ahead is Unilever. The food and household goods giant, best known for brands that range from Dove to Domestos, Hellmann's to Knorr and Magnum to Marmite, is due to report its first quarter results on Thursday the 27th of April. The shares are up strongly over the past 12 months, buoyed by a strong trading performance in Q3 and Q4 of 2022, thanks to the pricing power generated by its brands, a group-wide restructuring plan, an ongoing share buyback program, and, possibly, news that current non-executive director Hein Schumacher will take over as chief executive officer from the retiring Alan Jope in July. When Unilever published its full-year results back in February, Mr. Jope gave 3 pieces of guidance for 2023. Each of them will set the benchmark against which the Q1 figures will be judged. First, the CEO flagged that underlying sales growth for the year would come in towards the top end of the long-term target range of 3 to 5%. Second, he added that price growth would be high and volume growth negative in the first half. And finally, Mr. Jope flagged there would be only a, quote, modest improvement in the group underlying operating profit margin for the year against last year's 16.1%. He also added that the first half would come in at around 16% in this year 2023, and that's still well below the long-term aim of 20%. This is partly due to €1.5 billion of input cost increases in the first half alone thanks to inflation. So, in terms of Unilever's first quarter numbers more specifically, analysts are looking for a headline sales figure of €14.2 billion, up 2.7% on a stated basis and 7.2% on an underlying basis. In terms of the mix, analysts expect a 3.2% underlying drop in volumes and a 10.7% increase in price. Investors will also look to volume and price trends by geography and across the 5-pronged business structure introduced after last year's reorganisation. The new reporting business units are, by way of reminder, beauty and well-being, personal care, home care, nutrition, and finally, ice cream. Unilever doesn't usually offer profit figures at the first quarter stage, so it will be important to check if there's any change in the underlying margin guidance for the first half or the full year. For the whole of 2023, the consensus forecast for underlying operating profit is €9.8 billion against €9.7 billion last year, for an underlying operating margin of 16.3%. Finally, attention will switch to cash returns. As already noted, Unilever is running a €3 billion share buyback programme, and the first 2 €750 million tranches for the programme have been completed. The third tranche, also worth €750 million, started on March the 17th. Analysts and shareholders will also look to the dividend. In 2022, Unilever paid out 4 straight quarterly dividends of €0.4268 a share, for a total in sterling terms of 147.7 pence. Analysts believe it will go up to €1.74 a share in 2023, which implies an increase in the quarterly payment of 0.435, and at current exchange rate points to a sterling dividend this year of around 154 pence a share. I hope that you and your families are in good health and good spirits. Thank you for watching, and I look forward to seeing you next time.